going to be a quick little market update. The week of September of expiration at OPEX, the 15th, and just my conviction going forward and my thought process, right? So as I said, as we get closer to that quarter four and as we get closer to the end of year flows, the edge short side becomes a little bit less vulnerable just because of how the releveraging effects, the end of year flows, the January expiration, pins the market, suppresses volatility, and can potentially continue to lead to that melt up. But there are windows within this window, right? There's larger windows and there's windows within the larger windows that offer both long and short opportunities. I think the vulnerability long side has definitely been on a lot of commons. There's a lot of commons trades that have been very, very appealing and very clean and very easy on longs, and a lot of underperformers as well. And some risk off names as far as energy and consumer staples go. But I think there's also within these short two week windows between expiration and flows for the following month. There's windows short side that open up on a specific few names, but you have to be pretty tight on your execution as far as that goes, in my opinion. Given that we haven't seen a significant structure tape flip quite yet in terms of the risk on equity market, that I do think inevitably will happen. But as I said, the market can stay irrational longer than you can stay solvent. And that's been proven time and time again. So, as I said last week with that in-log from the week of the 8th, and then the subsequent continuation, the week of the 2nd, and then the continuation in the last week, the week of the 8th, and we get this continued little float higher. No real meaningful, effort from buyers. Nothing really insane. And not really a significantly appealing tape on a daily perspective to get long leverage on equities, right? I'll say that again, and I'll said it before, and I'll say it again, right? And what that means is you're really just going to have to pick out opportunities in different places, right? I don't think there's such a significant edge when we look at the indexes. SMH, we never really got that crack through the 283 range. Like I said, that September 2nd gap down and continuation and reversal, green to red closures. Not a good sign when you want to get a short-sided trade cooking up on these indexes, and so continuing to be selective is pretty pivotal and crucial. We have XLF, right? This doesn't really have the best look in my opinion, but we have nothing in terms of a clear risk opportunity quite yet, right? A lot of the sector continuing to look a little bit gross, but no real edge quite yet, right? It's kind of what you note when you look at these and you analyze how these are developing. Obviously, we had the 5% session on Schwab from the 5th, but this could be a potential short side focus going forward 100% for sure within this massive breakdown. But we also just, as I said, have to be a little bit speculative short side. I do think that this can be a short side focus going forward for sure if you wanted to take the execution off of that 95 range. When we enter this window that is approaching, the expiration is on the 17th and expiration is on the 19th. So as we enter this window, the opportunity short side becomes a little bit more vulnerable for sure, but we still have to be considerably speculative and cautious, right? But we are in that discounted range. We have a pretty clean opportunity within this $95 spot to potentially reverse us to $91.50. So this will really be a short side focus going forward, personally, in my opinion, where you can take some October expiration as we can potentially see this character flip on diminishing volume to revert us down to 91 and then potentially back down to 90, right? To potentially take out this internal low that we put in on the 16th that sparked the clean reversal in the earnings report, where we kind of continue to see this distributive range above all-time highs, right? We have very notable exhaustion. We have very notable climax being put in off the report, continuation really stalling from that buyer's perspective of things, and then the nice notable leg that we got on the 5th, right? And then this is all in the broader context of, in my opinion, a higher time frame distribution, where we continue to see these higher highs sold off following that March 2023 bank crisis, right? We see the reversal, we see an attempt at a higher low, and then the higher high is really notably becoming kind of stalled, and the lack of these lows being taken out being very notable as well, right? In the April reversal, we have a daily distribution that began here, right? That sparked a clean reversal from 83 to 67, 67. I'm done. With a notable massive volume that came in February, this sparked a decline. We see the rally into the all-time high kind of exhaustion, right? So this is a short side focused name for me, especially within this window. As I said, we have to be pretty cautious within our selection of opportunities short side, especially as we lead into Q4, where those flows play a very pivotal point or pivotal role. I've discussed a lot not only the summer of low liquidity and the flows being very meaningful and impactful with the holidays, but the winter as well, and that kind of November to January aspect being very notably similar to how we act in the summer. Obviously, there's times where that has been wrong. It's not going to always happen, but it's something that I think is pretty important and should play a role in how you execute, especially if you're more of a shorter term trader, in my opinion, right? Energy is another sector that I think looks pretty good, but this is just a commons trade, right? We see the really nice consolidation with XOM being my favorite name and constituent within this sector. We see the really clean pop. We're now seeing what, in my opinion, could be an attempted weekly high or low and a nice climax or nice anomaly in terms of volume. The daily sequence doesn't look the most appealing as if you take into consideration after hours, the third or fourth weekly attempt at this April 3rd gap, right? We see the nice easy move and attempt at a higher low, and it's just all about if this continues to that 94 range, right? But that initial target being 90 is pretty important. Very similar thing on XOM, very similar weekly kind of higher low internally within this higher low to potentially spark a pop to 119. But we always have the potential for this to fail and decline to take out the April lows, right? We have a risk-off sector here in energy that, normally, not all the time, but can potentially have that kind of dispersion aspect and not perform, in correlation to the risk on equities. And we've seen that time and time again, especially, in Q1 of 2024. So in my opinion, this is speculative. XOM is still a watch. I mean, you caught an 11%, 9 to 10% reversal on commons in August to September, and then there's a nice options opportunity to rally into the 113 to 115 spot. And we have an attempted higher low here. It's really, the hourly structure is not the most disgusting look, but it's kind of important to me to see how this tape feels and how we continue. Because if we do get that push to 119, that's a pretty clean target, and you could definitely take another options trade on some kind of internal structure. But if not, then I always do see that 72 gap being filled on energy, right? I do think that could be something that could spark a really clean move on energy into 2026. So for now, energy is a top long focus. We have the break of structure, the attempted internal higher low. This is still a clean long focus on commons, but there's a potential two-way opportunity for this to decline further into next year, or for this to continue into that 94 spot, right? So this is going to continue to be a watch of mine and a commons focus going forward. Tesla, I mean, I said this was one of my favorite outperformers within this window to push that 400 spot, closing the week at 396. Really clean and easy move out of this 367 or 358 range, right? That November 11th high that we put in. And it's just the subsequent consolidation, right? The considerable amount of weekly closures inside the June 2nd week, where we had that massive capitulation and peak fear, 14% session decline. And we see the pretty clean reversals, the nice clean legs after, the gap downs that are getting subsequently bid, the climax is being put in, and we finally reclaim that, kind of pivotal 332 spot last week, and see the nice kind of floor inside bars this week into a really clean 6% session and then 7.4% session on Thursday and Friday. So this is a pretty clean look. I mean, at this point, you can get a 20% commons trade, ride this to 404 to 415, maybe even to 440. But this is an outperformer that was really confident in within this consolidated window, and now you have to take that exposure off potentially. This could move a little bit more, but there's a nice long here and here, right? And there's just a commons opportunity throughout this range. I mean, if you wanted to get a little speculative, you can take the options opportunity on this kind of inside bar sequence where we see the diminishing volume and we see the low taken out of the Friday, September 5th gap, but I just like commons on this personally. AMD still looks hideous, right? I don't like this chart at all. I also think that there's a potential couple of ways that this can go, right? We did take out this low from the earnings candle in August, and we see we see an internal lower high here, that break of structure, that continuation lower, taking out the lows that we put in July as well. July 22nd, not the July lows, but the low from this gap, where we had that kind of initial parabolic burst, or yeah, here and then here. I think this is a distributive chart. I think this declines to $100 next year. I mean, you can take the opportunity here within this internal kind of, internal lower high, break of structure, internal lower high. I would be more focused on seeing that 170 to 176 range, because we have after this week we have 2 weeks of weakness, right? And so if we can see a nice little pop into that window of weakness, I think this can potentially decline further into that 146 spot. This is a top watch going forward. I do like how this looks for short-sided trade. I don't know how keen and aggressive I would be within this internal window. I would be more confident on a short that develops within that 170 to 176 window, just because there's, in terms of supply and demand, a draw being liquidity and a gap built above that range. And we're kind of seeing a notable bidder on this session, this kind of capitulation on the 5th, right? And taking out those lows on the 8th. So it's a watch, but it's nothing that I'm super insanely confident about right now at this current moment in time. I mean, I don't really have any good things to say about this NVIDIA chart. We see a really nice decline post-ER down to that 164 gap fill from July. And then a nice gap off of the AVGO report as well. Not the AVGO report, but off of, I think this was PPI, if I'm not mistaken. And then the failure within the earnings gap, right, on CPI. Nothing that really, like, piques my interest a ton. This is a little bit deeper than discount. Yes, we fail the earnings gap, or the earnings candle closure, but a potential decline into this 4% gap is a little speculative. It's really not a focus of mine at the current moment. Short side, I'm more of an AMD bear right now in terms of options trading. But this is just a larger name that I like to look at for the perspective of the broader market, in my opinion. And Meta, very similar look. I don't like how this looks right now, but I don't necessarily have the largest edge. Apple as well, we have a nice notable footprint, like I said, within this gap from March. This could still be, even though we have that fake out post report in July and the reversal of the 13% path of least resistance to that 220 through that 224 spot, this could still be a sweep, right? I still think that this is distributive, and I still think that we can revisit the 160s again. But it's a patience and a waiting game, especially when you have all this consolidation underneath the bear gap and the rally. You want to understand how the tape behaves afterwards, right? And that's essentially what we're reviewing here. And it doesn't look good. I mean, we're seeing the exhaustion. We're seeing a clean leg this week and a Wednesday. But within a bear gap and within that 237 spot, which was those July highs from 2024. So pretty big time spot on Apple, and will most likely be a short side focus going forward. But it's kind of a difficult thing to trade at the current moment in time. Personally, I mean, a lot of these just don't look good, but they don't necessarily offer like an edge. Right? We have that gap on Google. Amazon within the February earnings gap. It's just a lot of things don't look good, but they don't look so bad that I can necessarily sit here and get aggressive short side. Minus AMD, PA&W. Yeah, this could be our LPSY within this massive footprint. With this diminishing volume, I don't think it's going to be. I think we're probably going to see a decline and a higher low put in, and then a UTAD most likely, just because of how deep this is already mitigated the massive footprint, right? It sliced through the gap. We're still seeing a notable footprint, but I'm more than likely keen to believe that we will see that UTAD. If a subsequent structure develops, I'll be a little bit more flexible, but I don't know how aggressive short side I can be on a lot of names right now, just in terms of risk to reward. Now, if the tape significantly flips, that's a different story, right? That's a completely different story, and that offers a really nice opportunity on a lot of names. But like I said, it's better to be patient than it is to try to time things. UNH is a pretty big time watch. This had a really clean, couple of weeks of consolidation. And this is just a great example of a mature campaign with a lot of intent and as I said, maturity and just strength behind it, right? We have this massive decline from 630 or 600, no, 630 to, 230, right? We put in this massive footprint. We see a really clean reversal, and then we see the lack of follow through from the bids. So you can kind of, determine and infer from that we're going to see those lows taken out. That's where the draw is going to be. That's where we're going to see a more notable buyer show his hand again. That's where we're going to see that massive inventory collection / changing of the hands. Exactly what we get in perfect fashion with that massive volume spike, that capitulation, the instant reversal. We rally in the Buffett news. We see the subsequent consolidation with the inside weeks taking out the previous weekly low. And then a really clean pop, and we have this nice little hold on a daily perspective on Wednesday, 342, and then we get a nice little from low day on Wednesday to high day, Thursday 5% pop, which definitely offered a little options trade. But absolutely beautiful chart. We've now reverted almost 40% plus, 54% from the lows being taken out, which is where I was very keen on this position. As I said, there's 3 trades you can really take here, right? There's the long-term trade to revert this to 480, which is where I think this will inevitably revert to, 430 to 480. There's the short-term trade to take this to 340 to 380, which is what you take on the commons within this window underneath these lows. And there's the options trades, right? And there's an options trade here. There's one within this window. If you want to get a little bit ballsy, there's one within this window. But absolute beautiful chart. And now here's the thing, right? That shorter term position, you want to cover a good chunk. You want to wait for some re-additions, right? And that re-add can definitely be a vehicle to take us to 430, right? 440, 480, 490. And the longer term position, don't even touch it, right? And then the options trades along the way. That's just a perfect example of understanding timing and vehicles and risk to reward and execution on these opportunities, right? Intel. No, I mean it's looking clean for a commons trade potentially. Nothing quite significantly appealing yet, in my opinion. RIVN with this news hit on Friday. I mean, this is still a commons focus, guys. Just the lows being taken out, the influx of volume, the potential for this higher low to be put in here, and then maybe an internal structure off of this news. I mean, this could be a good buy within this $12 to $13 range to take us to 17 to 19, kind of being a significantly notable target. And then if all things go well, 22 to 24. I mean, if you want to take an opportunity on this name, I'd say this is the window. These are the targets. This is kind of the home run opportunity. It's just the maturity of a campaign like this, guys. The climax is being built out in May 2022. The low is being taken out. A historic volume spike in July 2023. Continue to trade lower, taking out these lows, seeing the progression stall, seeing another clean leg off of the Volkswagen news, seeing the continued exhaustion of the new lows, and then a potential higher low being put in here. Right, that's all it is. So I like RIVN. I like JD, 7% weak. I said this was a really clean commons trade from this $30 range to 35 to 40, and I still stick by that. The targets on this are 35, 38, 40. On a shorter term trade on commons within this climactic window. If you want to get a little bit speculative on the $50 push, you can. That's more of a longer term position. Like I said, understanding the time frame and the opportunity and window that you're executing within. But I like for a little, if you just take it from $30 spot, 15 to 30% return on some commons. I don't like options on this theme of China, and you're playing the internal accumulation here underneath April lows, right? You can play this. That's a way longer term scenario. It's been a year in development, and it more than likely will revert to, $53. But I'm playing this, right? I'm playing, this window right here, right? And I'm executing accordingly. And then if I see another opportunity, yeah, I'd re-roll this to 50 to 58. LYFT is absolutely thumping, up 40% from that $13 spot, 47. As I said, great buy in a great spot with a great anomaly on the earnings report and a great climax and a great rally and internal higher lows still being put in to this day. This was a really clean commons trade to 17 to 19 and now to 2150. It's kind of the end all target on this. Massive 37% gap from the May 2022 report where the kind of accumulation initially began. Is kind of where I think this starts to fizzle off, most likely within that $22 to $30 window. So, Lulu, I think this will offer up a really, really clean commons trade. You're continuing to see a climax being, I think I talked about this, continuing to see, a notable amount of volume being put in this week following the earnings report. And this is a name that I still think can revert up to that $480 spot. If we take out the COVID lows, the maturity behind this is notable. Nothing yet, but a commons trade setting up nonetheless. Just understanding, the August reversal, breakdown. We see this low taken out. We see this notable amount of volume pouring off the report. That's a big focus. TSM UTAD, question mark. We'll have to see how this behaves, as well as Palantir. Not super confident in this lower high, but it will be a focus, especially within this window of weakness. Hood still developing higher highs, being sold off, 2, 3, this is now 4 with an insane pop on Monday. Something I'm watching, a notable amount of volume, the third highest of all time. So we're watching that. Schwab is a short focus. If I had to pick short focuses that I'm really confident in within this window, it's Schwab and AMD. That's it. For me personally, it's Schwab and AMD this week, in my opinion, into October. As far as short side focuses go, right? The Schwab trade could really be setting up. The more that I look at it, this could really be setting up on October's if you wanted to take this opportunity. Monitoring a daily close under 95 and then trading this to 93 to 91 to 90. This is a really clean looking chart at the current moment in time. And then AMD, I'm looking at this kind of window as well, right? So, that's pretty much it for me, right? We have good commons trades, LYFT, JD, RIVN potentially setting up. Intel not really cooking up the best. Tesla was really clean. XOM was really clean. UNH was really clean. These are still looking pretty good. You have good short side focuses potentially setting up within vulnerable windows, being selective within those windows as to what opportunities you're going to take. Schwab is one of them. Schwab is probably a big focus of mine this week off this 95 spot. A big time focus in my opinion. And AMD is going to be a big time focus as well, but really only within this window. Expiration and OPEX, I would like to see a decline. When I look at just the S&P 500 index, ETF trust, Spider, it doesn't look good, but what's my execution here? I really can't justify trying to trade this short side right now, personally, right? There's not much to get in terms of an edge on this individual. I want to pick the individual names, not this right now, but that's it. Phenomenal commons longs, in my opinion, and then just waiting for those windows to short. And it's going to probably be like that for a little bit unless we see a significant flip in the tape, which is highly unlikely with the window that we're leading into. I said before, looking back at this range from Q4 of 2024, the big election pop sparked it off, but we didn't really get anywhere until February, right? We saw the footprints, we saw the dominoes start to fall, the cracks start to form, slippage began, the Tesla all-time high rally into December 18th FOMC, which sparked a 3% decline on the S&P. The NVIDIA DeepSeek on January 27th. Apple report in February. I think it was end of January. No, February. Wait. Hold on. I gotta look at it. I think it was the last day of January. Yeah. The Apple report. A lot of things were forming that didn't come into play. It didn't develop and actually give you that subsequent effect from that cause until February, right? Until March, until April. So it's going to be, in my opinion, long on commons, on select names, taking options trades when you think they're vulnerable, and shorting things in selective windows for the time being, right? And when you see those, slam them. But there's not much of an edge up here leveraged long, in my opinion. I just don't think that there is. I really don't think that there's a clean opportunity long on a lot of leveraged exposure. And I think there's commons trades, and I think there's shorts that are setting up individually. But that's pretty much it. This is a pretty dull and boring market that you just have to be patient and selective.